Welcome back to another episode of FUELSCast. I'm your host, Sydney Casey. Today we're breaking down the latest fuel market trends and what they mean for your business. Fuel prices have dropped significantly over the past month due to mounting bearish sentiment, and we will help you make sense of what could lie ahead. I'm excited to welcome back a familiar voice, Andy Milton, Senior Vice President of Supply and Distribution here at Mansfield Energy. Andy's been a market guru for over 2 decades and can help you understand the bigger picture when it comes to supply, pricing strategies, and market volatility. With OPEC Plus production increases, new sanctions on Iran, and the Fed's next move, there's a lot to unpack. Andy, welcome back to the show.
Thank
It
you.
is market update time. Lots going on this week.
Feels like it was just yesterday.
I know. And then OPEC met this week. We've had a Fed meeting this week. A lot going on. Crude prices are down, way down into the 50s. And I think the last time we talked, prices were in the 70s. So a lot's been happening. Why don't you bring us up to speed on kind of what's going on in the market right now?
Absolutely. It's one of the biggest is OPEC, and you're right. Crude has been the one getting hit the most, unfortunately, but it's also brought gas and diesel down a little bit with it. OPEC, coming out basically moving their meeting up a little bit, which I thought was really interesting. Then coming out and saying they're going to have an increase in production, even beyond the planned increase. So they're definitely trying to drive the market maybe a little bit down, a little bit, add more supply to the marketplace. Could be maybe a little bit of a conflict with the non-OPEC producers, South America, certainly other countries that are overproducing potentially, and then the U.S. marketplace, which has been continuing to take a little bit of market share.
Yeah. I've seen a lot of headlines lately with oversupply concerns. What's your take on the oversupply?
Well, and one other point on that OPEC situation is you got these some countries that are basically cheating a little bit on the compliance, so they're overproducing. And one other part of that I forgot to mention was the Saudis essentially saying, "Look, if you keep doing this, we got 2 million barrels per day. We're just going to start increasing and flooding the market potentially." So I think that will stabilize things. We'll have to see. Um, but yeah, I would say globally, we're not necessarily oversupplied by any means, but it's interesting to see that more product come on the market at the same time the tariffs are coming into play, which has a little bit of concern on demand. So next few months will certainly be interesting to see how things play out. I will warn everyone, and I'm reminded about it often. OPEC can absolutely do a 180 and change strategy, do more production, less production. They're gonna do that based on what they need to accomplish in their goals. So, um, U.S. producers aren't gonna do that. They're gonna keep chugging along. I will say it should be really interesting to watch the U.S. producers in the Permian. You're getting this 55, $50 barrel crude. Certainly, the new wells are going to come on, but you might even start curtailing some of the other stuff that's being done. Maybe they saw pause, slow down. So that will be an interesting aspect from the U.S. producers.
And how is this kind of balancing out with the demand? I know demand has been down recently. I think the projection is that demand is going to continue to decrease, but we are heading into what they consider the summer driving season. So, what are we thinking there?
Yeah, and I wouldn't say demand is down too much, honestly, yet. I would say you're right. Gasoline demand is going to drive, more use for crude, and we'll probably push back up to the low 90s on utilization in the U.S., which will then put more gas and diesel in the marketplace. Uh, I would say demand's been soft, seasonally speaking, maybe because the gas is in the winter season here, but I would say it's been surprisingly strong. You think about the tariffs and all the last couple of years of economic concerns, yet pretty resilient marketplace. Jobs are still very strong, which is again pretty surprising. The constant debate about the Fed and the current political situation and their ability to maybe influence or not influence. Um, yeah, Fed meeting this week. So it's been a little bit of a wild ride as far as news goes.
Yeah. How did that Fed meeting go? What was the outcome?
I think basically what everyone expected, right? We're going to hold the line. And the Fed has been, I would say, if you like it or not, they've been consistent at least in saying, look, unemployment says, it's still strong marketplace. Um, energy prices, I would say, have actually probably helped the economy, being the soft, to your point, coming down from the 70s and 60s and now upper 50s for crude. That's probably helped us quite a bit as far as keeping the economy going.
So, with prices being really in the high 50s right now for crude, Do you think it's more sentiment driven, or do you think it's long-term fears of what could happen pending all the economic and geopolitical things happening in the market right now?
That's a good one. Yeah, could be a little bit of both,
Yeah.
right? I mean, we went from a structure of a backwardated structure where the market was saying, "Hey, look, bring some more product to market that's a little bit tight," flip into more of a carry market where maybe a little bit more economic concerns. I think everyone's obviously freaked out by tariffs.
Mhm.
I can't think of another global economic upheaval, in the last probably decades than like that. I mean, you're basically throwing the entire global flows, trade into a crazy, whirlwind of chaos. But out of that, if that happens sooner than later, we'll probably be just fine economically. If it doesn't happen sooner or later, then things are going to be really interesting. Obviously, you've got a challenge on Fed spending, maybe cuts at the federal level. You're hearing some companies talk about maybe making some of their cuts at corporate offices. You know, certainly bringing more jobs back home, great, but that takes time. It takes a lot of time to get that production and industry essentially built back up domestically. So next 2 months should be pretty telling.
Absolutely. And how much of this do you think is kind of pending just the tariff conversation? I think there's a lot of uncertainty around the US and China with the 145% tariffs, and how much of that is impacting what we're seeing today in the price?
I'd say probably most of it is the tariff. I mean, that's
Okay.
pretty wild to think about. And again, not making judgment right or wrong. There's a
Right.
lot of reasons why it was done, but it is very chaotic on the marketplace. You can't, as a country, this is where we upset people on both ends of the political aisle, by the way. Um, you can't have $36 trillion in debt and be okay with that long term. So we have to do something now. Could you argue, chainsaw versus a small knife cuts to that whole problem may be different, but either way, we've got to do something and we've got to be kind of drastic with it. So we'll have to see how things play out. Obviously, lots of negotiations still to be had. Um, but yeah, we'll have to see how the tariffs play. But I would say that's probably the number one
Yep.
thing really going on.
Yep.
And it's not just a domestic, it's a global impact.
Yeah. Well, I mean, it's the number one thing in the news right now, too. That's all you read about. So, with the Fed meeting, though, there's been a lot of, recession talks that we might be entering into some type of a recession. What's your take on that?
It's tough. I would say, and again, thinking about the Fed meeting this week, I kind of agree to a extent. There's no reason to drop rates right now. Unemployment, at 4.2 last, it's still pretty darn good unemployment situation. Now, obviously, you have immigration going on, so that's going to probably have an impact on things like maybe housing, construction. But yeah, I would struggle to say we need lower rate to that point in time. Now, we've also got debt we've got to deal with, and restructuring and refinancing some debt. But I still think compared to the U.S. to other places globally, China, Europe, I think we're actually in a pretty good spot comparatively. Um, I would say interesting enough, we've got some customers that we deal with. Hopefully, they're listening today. But talking to them recently, maybe port activities down 25-30% in certain different ports. That does then trickle down through our industry. Trucking then will maybe be a little bit hit by that, a little bit softer fuel demand, but it could be more regional, maybe more certain verticals. I wouldn't expect it to be across the board.
What about jet? I know that's a topic we've touched on more and more lately. What are we seeing in the jet space?
Yeah, and jet's been growing like crazy, right? Guys, a recovery after COVID, but this whole certainly Canada, US, 51st state, maybe one day. That whole topic and conversation certainly has impacted, jet demand. People are traveling less to certain countries back and forth. So that's absolutely had an impact right now on jet demand. So the Department of Energy information for weekly inventories came out, and diesel inventories were, I think it was 13% the 5-year average.
Wow.
So that's not horrible timing wise because we're just coming out of a higher diesel demand season going into the spring and summer. Yet that's still 13%. That's pretty considerable. Gasoline was only 3% for context. So clearly we have a little bit of a problem, I think, on diesel that's going to be we're dealing with for the next few years in the US. And the context there is as gas demand peaked in 2019, gasoline's still the majority of the barrel being processed. We continue to close more refineries in the US with one closed last quarter, another one closing in fourth quarter this year, and another one potentially closing in California next year. I don't think we're done. I think there's more refinery closures to be announced. There's facilities that need major investment, and if they're not making money, and you're a refiner, why would you keep your facility open? At some point, you have to rationalize, optimize, and run a business that's profitable. And not all, most of the P&Ls that you're seeing produced on the quarterly reports of these public companies, they're not making money right now from the refining standpoint. So if you're not making money at 3-2-1 cracks in the $20-$24 range, you're certainly not going to stay open a whole lot longer at that point. So as we close more refineries, due to that lack of gasoline demand, due to lack of profitability, diesel is going to be potentially more impacted. So I do think diesel is going to be a subject that we're going to be dealing with a lot. Obviously, a lot for our business. Jet, so I'm in that same kind of boat where there's only so much of the barrel that's going to come from the U.S. producer on diesel and jet going forward. So we'll have to see what happens with that.
Yeah. What are you seeing about biofuels? Demand for renewable diesel or
A
biodiesel?
little bit in the news,
Yeah.
a little challenging.
Yeah.
Just was at a customer's office earlier this week, and they're asking the same questions, which I agree and understand. It's hard to be sustainable in a marketplace where now we're seeing what 40, 50, 60% less biofuels production than just last quarter or last quarter of 2024 at least. So that makes it really tough. How do you have a sustainability plan? How do you meet some of these goals that you're trying to get to? That makes it very difficult. And of course, diesel prices or renewable diesel prices and biodiesel prices are up considerably because of that less production.
Yeah.
So the demand is still there, but it's definitely somewhat elastic with price, and we're going to see a little less demand based on some of the crazy prices that we're seeing.
And what about the RINs prices?
They've been fairly steady, all things considering. I think most people would have expected rent prices to maybe go up a little bit, but there's so much concern about what will this administration do with the renewable volume obligation. If they hold the line, keep that strong, rent prices might actually go quite higher. But if they're soft, if it's lots of small refinery exemptions, then it's going to be something where maybe RINs are just not going to be able to help offset some of the credits that aren't there today.
Have you seen any, whether it's our customers or other people out in the market space, essentially retract their plans to use RD or any other biotype fuels?
Great question. I wouldn't say retract, pause.
Yeah.
Maybe. The good thing is a lot of these were goals, and we all have goals, whether it be corporate or personal goals. So you can move dates a little bit around sometimes. Um, yeah, I think retract might be a little too strong.
Yeah.
I would say maybe pause, slow down, because again, you're trying to do right with good environmental, sustainable actions, but you also need common sense to come into play. And why overspend if you don't have to, if it's not a necessary item for your business?
So with everything going on right now, what's your prediction going into this summer of where fuel prices might sit at?
I mean, we only have Ukraine, Russia, tariffs. Uh, I didn't realize India and Pakistan had such issue with each other,
Mm,
and of course, that's making the news.
yeah.
So, gosh, I don't know what it would be. How wide of a band of prices will you allow me to have this time?
Well, if we go back to December, you predicted crude prices anywhere from the low 60s to the high 70s.
So I wasn't that far off.
So you had about a $20 per barrel range. Let's shorten it a little bit.
Sure.
We are below 60s right now.
I don't see a reason we couldn't get to low 50s maybe as a bottom. I think you're going to see so much though the next 2 months. It's going to be okay. How much are the tariffs actually impacting us? How long are these lasting? That's just probably number one item on my mind. It does concern me that as consumers, we're taking a lot of debt on. At these interest rates, no one can really afford to buy a new house and sell their current house. So that really slows down that marketplace. Um, yeah, I'm probably not on the recession bandwagon like some other people are, because I think the economy has been awfully resilient. But if we see that 4.5 or 4.2% unemployment get to that 5.5, 6% range, then I'm thinking maybe we could get to the mid 40s as far as crude goes. But you get that low, you're gonna start you're gonna start changing the crude production pretty dramatically in the U.S. Um,
When
but
was the last time we would have been in that range?
man,
That would have been a while.
it was. I will say though, don't underestimate the power of energy on the economy as far as impacting it in a positive way. I always go back to 2008, 2009 timeframe when we went from 2007, we were around $60, $70 crude. In 12 months, we went to $140 crude. And certainly, yes, mortgage crisis, credit debt, swaps. That was a main reason that drove us in that horrible economic situation. But don't lose sight of the impact that energy cost doubling on that, because you're talking about transportation, production from crude, all the chemicals and byproducts, and then everything's on a train, truck, or plane these days, in some kind of capacity. So energy, in my opinion, has a double whammy on the economy, but it also helps out when it stays low. So if we stay in these 40s or 50s, if for some reason it gets that low, we stay there. I think that actually helps us quite a bit, as long as the tariffs don't last too much longer, and really slow down the economy too much. And of course, it's a matter of how long it takes interest rates to come down. Right now, they're saying June, but I would venture to say I don't think we'll see a cut in June. So I'll make that guesstimate,
Okay.
but then we'll go from there, and we'll have to see how the economy goes. So crude, call it 50 to 70. Can I keep a $20?
Sure, I'll give it.
I'll
That's
stay
an
there.
educated guess. So,
No,
now last time we did have Mac on the podcast, he guessed 75.
so I beat him. So
You
you're
did.
saying, all right,
Technically, you did
all
because
right.
you were,
It's my one time I ever beat Mac.
yeah, you didn't necessarily go over or under. But when we had Mac, we talked a lot about fixed price and that it might be a good time to lock in a fixed price for customers. Now, with all of the volatility going on, is now a good time for folks to call and start having that conversation about locking in prices?
Yeah, I mean, something and Mac would say the same thing if he was sitting here. First, obviously, evaluate your business, whatever your business is. Evaluate what your risk portfolio is. If you're trying to beat a budget and you want to do that every year, perfect, great, that's awesome. If you are able to pass along cost increases and cost decreases, maybe consider just layering a small portion into fixed price just to kind of help manage your spend, but and kind of protect some margins in some cases. But I'm also very cautious of I don't want people to think that we know exactly what's gonna happen with prices, and that, anytime there's a dip, they should just go all in. Um, I would also suggest layering in at times. If you like a price, layer in 5%, 10%, 20%. You don't have to do all your volume at any set number. I think our program is quite flexible as far as that goes, so we hopefully offer that for the customers. I would say, though, usually when there's a bearish situation and everyone's kind of down on the economy, it's kind of usually a good time to buy, whether it's stocks for your personal use or like this for energy. It could be a good time at least to buy a little bit. So I tend to go against the herd as far as that goes.
Is there any scenario in which you see us shooting to an 80, 90, 120, like you mentioned, type price soon?
Sure, why not? I mean, we don't have the SPR levels like we do today. Soon, maybe not, but you again, I don't think people in 2008 assumed we go to 140 either. So I would watch global demand as an indicator. I would certainly watch U.S. demand, U.S. production, because you get the situation where maybe OPEC suppresses some global production that maybe isn't in the cartel. Maybe they suppress a little bit of the Permian for a degree, and then the economy comes roaring back a little bit. We don't have that production because we have invested a lot more in green fuels than we have traditional oil and gas in the last few years. So I will say, I mean, globally, we're not at some like crazy high level of inventory. We're actually kind of relatively low globally as far as inventories go. So I could absolutely see us getting in the 80s if you get a little bit of disturbance. OPEC changes strategy again. Economies get roaring. We figure out the tariff situation. Yeah, why not?
One thing we didn't really touch on, but I've heard you talk about it a lot recently in some of your other presentations, is fertility rates. Why don't you
Usually get some attention because they don't really expect that to come up.
yeah, it's not top of mind for a lot of people, but it does play into the demand and the global outlooks and everything. So talk a little bit about how that's related and how it can trickle down into, energy pricing.
Perfect. And I love that you brought that up, by the way. Because I do try to think longer term, right? What's going on with particularly refineries in the globe, and we're interested in this period where the U.S. is not going to build any new refineries. Our last new refinery was built in 1976. Our second youngest refinery just got announced that they may close it next year. Okay, not definitely, but maybe. Well, the second youngest, that's crazy to think about that the second youngest refinery in the U.S. is like 60 years old. So we don't have a young industry as far as that goes. But what's great is it's mature, it's there a long time, it's paid off. But, we do have a lower demand, flat to lower demand in products projected going forward. So we're going to have to do something in the U.S. So I do expect the U.S. to continue closing refineries, a couple every year. Uh, Globally, though, they're being built in Africa, Middle East, and Asia. Guess where the fertility rates are the highest? Africa, Middle East, parts of Asia, India. And in the U.S., I think we're at 1.61 children per couple. Korea's at one child per couple. You're gonna. I would fully expect to see Europe closing. I would expect to see parts of Asia, particularly Japan and Korea, struggle to keep refineries going. Um, when as these California refineries continue to close, guess where they're going to come from? The product is going to come from Asia, Middle East, Africa. These large, new refineries that need a home for the product, while their population continues to want cheap, reliable energy.
Do you foresee scenarios where we go to having AI or robotic type refining
It's a
processes?
conspiracy show. What do we? What do we?
Is
Okay.
thinking, what do we do when all of the refineries shut down because there's no
Well,
staffing behind it? I know that's extreme, but I mean, it's where my brain went.
okay, yeah. Let's don't go too extreme with it. So, yeah, I mean, I would hope we find ways to be efficient. Yeah, I would also hope we have ways to be safeguarded and security from hacks and everything now still being connected to the internet. Here's my take on AI. All right, so we didn't ask this question prior, so thanks for surprising me today. AI is going to have amazing benefits for our society, just things we can't even fathom how wonderful they're going to be. But just like anything in our lives or humanity in general, there's a pro and a con, a good and a bad. There will be something we can't expect either that's a super big negative. In my opinion, that's going to be employment. Unlike the car replacing the horse, which you just basically creates maintenance and parts and other ways of creating labor, I don't see AI, in my opinion, creating more labor. If anything, it's going to be less labor. So I think that has a big negative impact on employment factors. And I do worry about generations ahead. Where do you work? Because AI is going to enhance a lot of jobs, enable us to be more efficient, more effective. Lovely, awesome, great. It's going to also replace some people. That maybe needs to happen because that will then allow other people to go and do more productive things with their time. Uh, I would expect maybe better life balances from our society going forward as well. I think that's going to be an output from that. But how much of an unemployment hit or added to unemployment that does, I think that's going to be an interesting, unfortunate negative side effect.
Anything that we didn't get to today that you want to put out there for
Yeah.
what's going on in the market?
Yeah. I think the biggest takeaway I would say, and this kind of goes along with some of your line of question you're asking, is lower prices, economy, recessionary type things, whatever that is. Ultimately, the lower costs are in our world. I'm thinking from a consumer standpoint, personal vehicles, gas, diesel, crude. It also then helps us rebound for the future. So those corrections, while not fun, often do help grow the economy. And you can look at the economy over a super long period of time, and those little dips do help us usually exceed as we kind of reset with things. So I don't look at it as a super negative, but obviously be prudent in your personal life and your work life and make sure you got everything buttoned up.
Yep. Well, Andy, thanks for joining us.
Yeah, appreciate it.
Yep.
Thanks.
Andy, back in December, you posted a bingo card on LinkedIn, and there were some not so crazy and then also some crazy sections to your bingo card. And I was just curious, what kind of progress have we made on that bingo card? Have we checked any boxes off? Are there any that we think we might check off in the
Sure,
near future?
sure. And for context, it was just for fun.
Yeah.
And you always hear people say, "Well, I didn't have that on my bingo card," and kind of got me thinking that would kind of be a neat thing to do to see actually what crazy stuff actually can come in one year. And of course, the first 4 months of this year have been pretty crazy,
Yeah.
so it's definitely helped. I would say 2 things have been checked off already. So again, for those watching, if you've been following me on LinkedIn, if you haven't, please follow me. But, I absolutely will pay out to the first person that gets bingo, but, 2 boxes so far. We had 80 million gallons of biodiesel produced in 1 year, which is basically half of what we had in fourth quarter of '24, which is crazy to think about. Again, didn't think that would necessarily hit, but here we are, the first month of January. I think we had 78 million gallons of biodiesel produced. So 1 box done. And then the other box was around refinery closures and announcements. So it was besides Phillips, which was the LA refinery that's going to close in October of 25 as it currently stands. More than likely, Valero will close one of those refineries, particularly the one in the Bay that we talked about earlier. And that announcement said either a 25 or 26 date. If they officially do decide to close it, I would say that box has been checked as well. What's funny and hilarious, again, you got to laugh at life because it's so crazy and so wild sometimes. I put aliens on there merely just as a joke. But as we were talking about earlier, there was a gentleman that was the whistleblower for the U.S. Air Force. Again, you got to think people in our government, certainly in military positions, I don't think they're really kidding around when they say what they've seen. And he has now been hired on by a senator as a senior advisor. And I don't know, maybe we'll see some evidence of aliens out there. Who knows? Maybe that box will check. But I totally didn't think that would actually didn't think that would actually happen. So
Well,
that one may occur. But unemployment was on there. I expect the immigration one probably will hit. We're actually getting out and kind of refocusing our immigration a little bit differently. I think there was 1.5 million a month of legal immigration. That will probably get triggered. Interest rate one could certainly hit. And then the crude futures, we were only $5 away from that box hitting as well. So we'll have to wait and see what else triggers, but it's only early May at this point.
And what was your payout for the?
I didn't say.
You didn't say.
And it's at my sole discretion, by the way. There was a fine print.
Okay.
Read the disclaimer.
Got it.
Yeah, we'll have some fun with it again, just for fun.
A special thank you to Andy Milton for joining us today and helping us make sense of these complex market dynamics. His insights are incredibly valuable, especially in times like these when so much is shifting week to week and even day to day. To our listeners, thank you so much for tuning in to FUELSCast. If you found today's episode helpful, be sure to subscribe, share it with your peers, and reach out if there are any topics you'd like us to cover in future episodes. Until next time, bigger reach, broader solutions, better advice. Now you can.